Hi traders, welcome to another episode of the FXP weekly analysis. Sorry that I didn't able to send this out in the weekend. So what we're doing is midweek analysis kind of thing for this week itself. Right, so for those who are new and first time, welcome to this video analysis. What we'll be doing is we're sharing with you some of the insights and how we do our market analysis. And for those who have been with us for some time, really thank you for your support and encouragement. So if you like this video, feel free to subscribe to our channel, like it, and if you really learn something out of it and you would like to share it, feel free to share it with your friends who are trading the forex market, etc. Alright, so let's jump straight into the market for today. What I would like to share with you is we'll be talking about three pairs today, mainly the US, Canadian, the New Zealand dollar, as well as the gold itself. Right. So what you realize is that these three pairs are very aligned to the commodity. All right. Having said that, you might want to take note into how you want, this is more about like portfolio management, whether your exposure to a certain instrument is being managed and if your portfolio is being diversified. Alright, having said that, what we'll be doing is more, not so much on that, but more on how we analyze the technical aspect of the specific instrument. Right, so let's start with the US Canadian. Right, if you look at this pair, at this chart, where you look at what the market is doing currently is still in a consolidation phase, right? But if you jump up to the daily chart time frame, what you see is still in an uptrend, all right? And currently, what market is doing is in a consolidation phase, all right? And since the overall sentiment or overall trend is still towards the upside, what we'll be looking for in our hourly time frame is a setup that will give us a certain risk to reward ratio that is ideal to enter the market together in the long-term direction, right, which is the upside. And if you look at this, what we have over here is two potential patterns, all right. One is smaller and the other is slightly larger, right? So let me just show you the larger one first. What we identified is that we have a potential cipher pattern forming, all right. If you're unsure of what the cipher pattern criteria is, etc., I would say that you can easily Google in the internet what are the rules for a valid cipher pattern. But just to keep this video short, right, I won't be going through with you the step-by-step guide. But if you're interested, we have a webinar which you can find the link below, right? But for now, what we're interested at is there's a cipher pattern forming, all right, and the completion will be at the 786 retracement. And if you look left, what you see is there is a minor confluence of a structure level as well. Alright, so if price does come back down to this 786 level, you can look for a potential long or buy entry, alright, a long position over here. So for harmonic pattern, the stops will naturally have to go below your X point, alright? So if you put it slightly below, it's over here. And how we set our targets, right? We'll be using a lot of Fibonacci as well. So we'll be using from this point, you pull a Fibonacci to where you enter. And our first target, right, let me just delete the other one. Our first target will normally be the 382 retracement, right? And the second target we'll be aiming for is the 618 level, right, just below it, so to ensure that your TP will be hit, right? And if you look at the risk to reward ratio, right, for harmonic pattern, it's normally more than 1:1, right? That's what we would prefer to trade as well, right? For all the trades that we take, we want to have a risk reward ratio of more than 1:1, right? So this is a huge, as in not huge, but a larger pattern, right? And what we had is that there are traders in our community to share with us that there's also a potential Gartley forming on this pair, right? But this Gartley is a smaller one, right? If you pull from this leg itself, what you see is that this retracement comes in at the 618. And with this 618 criteria, what we have is a potential Gartley pattern, right? Which looks something like this. And the Gartley pattern is usually completes at the 786, right? And what you see is that this level, right, price has hit it and completed. And if you look left, there is indeed some structural level as well, right, over here, and some minor one over here. But what you can see is that price has broke below this 786 level. But I would like to share with you that this pattern remains valid as long as price doesn't close below your X point. Alright, so what it can do something like this. Right, it can comes down over here, and if this pattern hold, right, this potential setup can be something like this, right? It comes up and bounced up. But for our rules of engagement, the trading plan that we teach our clients is that we would want to look for the largest setup instead of this small one. All right, so I wouldn't be trading this setup, right? But instead the cipher pattern. All right, so just sharing with you on this pair what we're looking at. All right. The next one that we want to look out for is the Kiwi, alright, the New Zealand dollar. And what we like to do is to once again show you on the daily time frame, alright, the overall trend is certainly bearish, alright, still to the downside. But what market is doing is similar to the US Canadian pair, which is in a consolidation phase. So what we want to do is we want to identify certain entry setups that enable us to ride the trend continuation, the overall trend, which is a downside. Alright, so with that in mind, what we're looking for is setups that give us a very good, or not good, but ideal shorting position with a certain risk to reward that we prefer. Alright, so if you look at this, what we identify is that we have a potential bad pattern. Right, so if you see from this where price move and there's a retracement up to the 638.2, right, so this gives us a valid bad pattern, a valid potential bad pattern. Right, and the bad pattern will be completing at the 886 level. Right, if I drop in a horizontal line for you to see, what we have is, right, good structural confluence level in the past. Right, so if price comes up to this level, we'll be looking for a short position, right, with stops just above the X, and what you can see is your risk is really minimum. Right, and what we want to do is we want to measure our Fibonacci tool, alright, to take targets. Alright, our first target is again 382, and our second target will be at the 618. Alright, so if you look at the risk to reward ratio, the first target gives you slightly more than 2, and the second target gives you 3.3. Right, certainly very ideal setup, which definitely this is something that we'll be taking. Right, so this is something that if you are also trading and monitoring the New Zealand dollar pair, a potential setup is forming. Right, the last one that I want to go through with you in this video is the gold market. Right, let me just show you once again what's happening on the daily time frame. Right, overall I would say that the market is still in the downtrend. Alright, you can see there's a lower low and a lower high forming. Alright, this is the initial high, a lower low, a lower high. Alright, and then it broke the lower low and formed another new lower low. Right, so what I'll be looking once again is to find setup that enable us to enter together with the market. Right, so if I draw horizontal line to symbolize certain support and resistance level, what you can see is that this is a previous structure level which has been broken. Alright, so what we're looking for is that if price comes back up to this level, we can look for a potential short setup, right? Aiming for a new low, or I would say, first target normally is around your previous structure level. But if you drop down, right, so this is a trend continuation setup that you might be interested to look out for. But if you drop down to the 4-hour time frame, right, what we are seeing is that price has broken above the previous consolidation area. Right, previously price is consolidating in this range and it has broken above it. So what we'll be interested at is if price comes back to this area, right, this level, which is the 1105 level, we'll be looking for a potential long entry towards the previous structure level, which we have identified on the daily time frame, right? And we'll be taking our position off over here and then change it into a short position riding lower. Right, so for the short, or not short term, but the nearer term, what we're looking for is a long opportunity in this region should price comes back up, and we'll be using a lot of Fibonacci. So let me just pull in the Fibonacci tool. right? And what you'll be seeing is that there's a confluence of the 382 retracement level as well, right? And our stops will go just slightly below the 618 with our first target at the previous structure, and your second target can go right all the way according to this, right, which is a structure level that we have identified on daily time frame. The other method that you want to adopt, or you can adopt, is that to use a Fibonacci extension tool, right? And if you are more conservative, you can aim for the 127, right, just slightly below your previous structure, right? So this is something that you can look out for in the midterm, I would say short term, and should price comes back up on the daily time frame to this level, which is the 11.45 to 1150 level, that's where you can look for a short opportunity, right? So far, that's it for this week. I want to keep this video short. What I want to share with you is that later today we'll be having a free workshop, right? A free 2 hours workshop to share with traders who are interested to find out more about trading. We'll be sharing with you certain trade plans, giving you templates how you can do it. And if you're really interested and you can't make it today, what we'll be able to do is you can sign up for next workshop. The next one we'll be having is on a Saturday itself. Alright, some of our coaches will be sharing with you how you can improve and transform your result. Right. For myself, what I'll be doing is I'll be having a talk in NUS. So if you're interested, you can also join in for that. Alright, that workshop it's called the NUS FX 101 workshop, which is organized by the National University of Singapore. Right. So all these links you can find below this video. So if you're interested, right, do subscribe or register, right, to attend all this event and workshop itself. Other than that, I hope you'll be having a great week ahead, and I'll talk to you soon again.